Hello, everyone. My name is Jared Broad. I'm the CEO and founder of QuantConnect. QuantConnect is a platform for quants engineers that are scientists to explore financial data, to find insight and alpha, and trade it through to their portfolio. We have the largest community of quants in the world, and it's all powered by a radically open source community technology. Today, we're very happy to introduce Chris Kramvis, our lead investor, the CIO of Dropshot Capital. Thank you for joining us, Chris. I'd love to hear a little bit more about Dropshot. What do you do?
Sure, no problem, and thanks for having me on today. So Dropshot is an entirely quantitative fund. We've been trading since 2018. Our fund launch is a tactical rotation strategy that focuses on sort of cross-asset movements, and we only use machine learning. Basically, all facets of our trade are driven purely by machine. We don't have any manager intervention. And we've been heavy users of QuantConnect from the beginning.
So it would be great to hear a little bit more about you. What's the history of Dropshot? Where are you today?
Okay, so as a quick history, Dropshot started in 2018. We started with 5 million AUM and have been able to grow that over time through trading profits and reinvestments up to about 22 million today. We've been happy with the growth, but are obviously always out fundraising and looking to get closer to capacity, which is, in the couple $100 million range, at least for this strategy. As far as, performance, we've been extremely happy. We're listed in the Barclay Hedge Balanced Stocks and Bonds Index. We've been a top performer in there, for the last several years, being a top performer, particularly in the last 3 years, and periodically, easily in the top 10 on a month-to-month basis.
Awesome. And powered by QuantConnect. So
yeah,
high five.
Yeah, of course. On that note, I should say, we've been trading on QuantConnect since day one of the fund. Awesome. We rely completely on it for our live trading and monitoring, and obviously been very happy, which is why we're speaking today.
Awesome.
Yeah, so since we've been very happy with with QuantConnect so far, I'd like to hear a little bit about where you think it's going in the future and how you're looking to build it out.
We think that the world is going to embrace open source more in finance. There's so many pressures that are currently on financial companies to perform, to be efficient, to deal with fee compression, the rise of robo-advisors, that active managers are needing to get more and more creative about how they achieve their returns. Part of this is going to be embracing technology like QuantConnect. And so we think that in the future, more and more quant funds are going to be turning to platforms and ecosystems like QuantConnect. And that includes startups all the way up to larger firms who are dealing with large legacy technologies, where it's more than overdue time to upgrade them. And all the way down to the smaller firms who have the choice of either spend years and years of their time and millions of dollars building the same infrastructure, or embracing some open source technology like QuantConnect. So we're hoping we can make the world massively, massively efficient by building all of this connectivity and all of these brokerage integrations once, open sourcing it, and then having the open source community work together to build a really great quant foundation for the whole world.
Yep, sounds like a pretty lofty goal, but one I definitely agree with. And who would you say are your main competitors right now? Who else is out there in the landscape, and what are people looking at?
In the last couple of years, it's been interesting. Before that, we were kind of alone in the space. There was a few other little startups, but in the last couple of years, we've seen Bloomberg lean into Bloomberg Quant, along with Amazon launching a test product, I think, called Amazon FinSpace. And then there's a few other players, like a platform called Beacon, that launched in the last couple of years. And so they are all cloud and closed source technology companies today. But it's really great to see this validation from companies that have billions in assets, choosing the same market and the same space that we are.
Yeah, I mean, that's very interesting. I do have a little bit of experience with some of these other competitors. I mean, I actually started out, a long time ago, and I had a strategy running on Quantopian, which I would say used to be your pretty much only main competitor back maybe 10 years ago. Unfortunately, we all know how that turned out. So
5 years, 5 years ago. Yeah.
yeah.
What we think, though, is that QuantConnect embracing open source is going to be one of the key advantages to why we're going to win. All of the other players being cloud focused have an incentive to try and lock people into their cloud platform because that's how they make revenues. And the other ones who are closed sourced, they also run up against the same barriers that other closed source companies. Quants want flexibility, they want transparency. Engineers really want to get their hands into the code and understand how things work. And so we think that with open source, we can run anywhere and we can find business models that don't necessarily rely on the cloud. So that's why I think we're going to win.
Yep, that's very interesting. I think, yeah, I mean, closed source platforms are very hard to deal with. You know, the minute you find something that's not quite to your liking, whatever, you're always going to want to customize. Pretty much all quant software is, you know, specific purpose and customized to specific strategies, use cases, investor types, and not having access is always going to be a roadblock. For us in evaluating systems, we found that closed source systems are hard to integrate into our process. And, you know, professional grade ones tend to be extremely expensive. You know, we're talking tens or if not hundreds of thousands of dollars. We did evaluate at some point Quant. We found, again, while it did have some pluses, it just actually did not have anywhere near the flexibility of QuantConnect. It was harder to query and get data out. Instead, we were more relying to do quick analysis on the QuantConnect notebooks. They were just easier to use, quicker access, and easier to manage the code. Yeah, we are also big believers in the ecosystem that you're building. Having the community there is extremely helpful. You know, posting things and getting quick answers is useful, and you know, source code access as usual is paramount. So, congratulations on building, you know, a great system.
Thank you. We're just getting started. There's a few things there. So one of our strategies is we're taking a disruptive approach to building this business. So I mean that in the classical, like, textbook definition of disruptive businesses. So it's a strategy created by a professor at Harvard called Clay Christensen, and it involves serving a segment of the market that is typically underserved, because the existing major market players see them as potentially low value or not worth capitalizing on. And so the classic examples of this were in the early days, there used to be valve radios, and they were running with valve transistors, and the RCA company would make beautiful pieces of furniture, and you would spend hundreds of dollars on it and put it in your living room. And then Sony came along and they made the transistor radios, and it was like $2, and it was a little bit lower quality, but they were able to distribute to a much wider audience. So we were intentionally aiming to reduce our costs for the clients that we're serving, so that we can hit a much wider audience of these funds that we believe are going to be the next generation of Renaissance technologies, the next generation of these multi-billion-dollar funds, and to really instill an ecosystem at the core of the lean technology and the lean open source. And then long-term, lean and QuantConnect get better and better, and continue to sort of grow as an ecosystem and as a platform.
And how are you guys seeing the growth in the quant market? Like, what's the sort of market size that you're seeing? Or, you know, because being disruptive is useful as long as the market is ready for it.
Yes. So S&P has published a report where they track the number of funds in the world, and there's about 80,000 official registered funds. And then there's a few million sophisticated investors that we think would be capable quants and would be interested in writing code. So it is a rather a bit of a niche in terms of like numbers, but the size of those 80,000 funds, they control trillions and trillions of dollars in assets. So in terms of the number of people, it's relatively small, but the size of the industry is still enormous. Quantitative technology in general is growing enormously as well. Over the last 5 or 10 years, it's risen from about 5% to about 40% of funds using quant. And the other 60% are currently in Excel or sort of by gut feeling or by poring over bank statements and that sort of thing. So there's still a lot of space to grow where we can have quantamental, like have researchers that are equipped with quantitative techniques. So it doesn't have to be sort of black and white 100% execution. QuantConnect can empower those investors to harness quant techniques. And so, yeah, there's a massive amount of businesses behind the scenes that would benefit from a technology platform like QuantConnect.
Yeah, definitely makes sense. And how have you seen how are you seeing growth between funds and individual users on your platform? Have you seen a shift, between one or the other, or has it been pretty consistent over time?
Yeah, so in 2020, we launched something that we called organizations. And so that was right after the pandemic. It was April 2020, April, June. And we had this insight that people were limited on our platform. And so we built a way for people to scale what they're doing inside QuantConnect. And that was, makes it look like Amazon Web Services. You can scale up nodes, you can add resources to your account, and that really led to an explosion of businesses using the platform because they were able to grow and add their team members and fully utilize QuantConnect. Since then, we've seen revenues grow to about 50% driven by corporations, and the other 50% are individuals. But the companies make up less than 10% of the actual numbers, the client base. So we think this has all been completely organic. And so with some investment and some effort into the space, we think that there's a massive opportunity for the company to properly serve more sophisticated corporate clients. So what sort of challenges have you faced in starting up a quant fund, and have you seen how's QuantConnect helped?
Okay, so one of the biggest areas that we find QuantConnect has really made a huge stride in is the data marketplace. One of our biggest tasks as a quant fund is obviously to continuously be on the lookout for new and informative data. We owe it to our investors to always have the best data in our system, as well as the strongest signals. We don't want our our competitors getting a lot of edge that we don't see. And when we go to evaluate these data processes, that usually starts with a trial. So if you're just dumped a bunch of data, you have to normalize it, put it into your own system's format, and then be able to quickly evaluate, is this something that we're interested in? Does it actually provide no value? And things like this. It's a lot of lost resources just in startup time, documentation reading. And, really you should be doing something else. You should be back on, pure alpha generation or the data analysis part of the new data versus, just storing it in a database and getting it ready. QuantConnect's market data place has given us, easy access and is, turns it into minutes to throw into your algorithm and see, okay, did this help us or did it not? Also, the ability to turn on and off licenses without, huge contracts. And again, there's a big money saving there, not being locked into a 1 year, 2 year, 5 year, whatever data contract. So yeah, the flexibility of QuantConnect there has been extremely helpful, and we hope that you guys continue to onboard more data vendors as time goes on.
Yeah, it's actually part of the strategy of building the ecosystem of QuantConnect. So we're building open source core technology of Lean, the modeling engine, but then outside of that, we're integrating all of the data sets in the brokerages. And so each one of those integrations represents a company. So the broker, for example, Interactive Brokers is one of the brokerages that we integrate with, and then we have a listing in their application marketplace, and then we also have a way for you to pay for QuantConnect from your fund account in the Interactive Brokers marketplace. And so for every brokerage we integrate with, there'll be a partnership or something where we can work with the brokerage as a business, as QuantConnect, to improve the number of connections to the QuantConnect company. And so for the data marketplace, it's the same thing. All of those alternative data vendors are seeking distribution, are seeking third-party validation of the data. And so QuantConnect is able to provide that ecosystem where they're getting exposure to a lot of funds. We're able to aggregate all of those funds together. So it's a relatively low overhead cost for them as well. And then they can turn around and advertise to their clients, look, this is our data set validated on QuantConnect. This is a completely third party. They have no affiliation with us, and they were able to find alpha in our data set. So it's a great way for us to build our value networks in the disruptive technology model. These are just a network of businesses and consultants and engineers who depend on QuantConnect, the company.
Yeah, that's all very exciting. How have you found onboarding new data sets or going out and finding, like, are you finding them? Are they finding you? How has this sort of process been going?
Yeah, it's a mix. We have a lot of inbound requests, and there's a period of review where we need to ensure the quality and the longevity of the company. So as a quant, you want at least a year of data to be able to run a model or a simulation, depending on the time horizon of the data. And then you also want to ensure really good corporate action tracking. So the linking to the securities to make sure the data is accurate and referencing the right company. And so they're two very hard problems. You know, it takes time to gather data, and then it's a hard problem to really do the linking, the security linking properly. And so we work with a lot of companies to help them get that linking in place so that we can really analyze in an accurate way with third-party data sets. And then there's other ones where we're doing outbound research and getting referrals from clients that are currently using QuantConnect. They're going in and saying, hey, we want this. And they're telling the alt data, and the alt data is coming to us. Yeah.
Yeah, referrals are always the best way to do anything,
Yeah.
I find.
Yeah.
And the security master problem is massive. Every data set's going to have its own way of, identifying tickers or,
Right.
dealing with corporate actions, whether they keep the ticker the same or just invent intermediate tickers, or, there's basically 500 different ways of doing this. So, knowing which equity was what and, tied to which data is, hugely time consuming. And I agree,
Right.
it's another huge value add from QuantConnect.
Right.
I guess to follow on the sales process questions, how have you guys been going after more institutions? You said, that the balance has been towards the retail investors, but, going forward, you'd like to have more funds like ourselves, or, hopefully for you, people who are a bit bigger in AUM. How are you looking to go after them, onboard them onto the system?
Sure. So it's important for us that we stay true to our original mission to provide access to quantitative trading. And we wouldn't want the minimum cost for the platform to impede that. We want to make sure that the minimum accessibility is always there so that people can access the quant tech if they want to. So that said, we've opted for a more product-led organic growth up until this point. We get a lot of traffic to the website from people's referrals and from SEO, and that has driven the company's revenues through product hooks up until this point. And so we have a lot of room to grow in the product-led growth at the moment, and that keeps the overall overhead of the company reasonably low and allows us to offer the product and the ecosystem at a relatively low price. So that said, we still have thousands of people a day that are visiting the site and we're not following up with, and we're pretty sure that they're corporate clients. And so we absolutely plan to add a representative to start doing some more proactive outbound inquiries to those visitors to the site who are from a corporate environment or visiting from their company, internet, that sort of thing. So we can identify those potential business leads. So we keep the pricing model like Amazon Cloud. You go in and you can spin up a few nodes. If you're a student, you can spin up a single node for your blog. Or if you're a company, you can just start growing and growing and growing. And then before you know it, you can be spending thousands of dollars in Amazon. So it's a very similar pricing model that lets the smallest funds and investors use the platform, but also we can grow to support the larger ones as well.
Yeah, we personally take advantage of the scaling. We have, several live trading nodes, several research nodes, many backtesting nodes, and have found it, extremely easy to add and subtract. Like you said, like just going on an AWS and, hitting an auto scale, just as easy. Have you found in dealing with different types of clients, particularly the institutional ones, that they have a preference for on-premise versus cloud, or are you seeing anything in that sort of transition? Are they currently on-premise and would like to move into the cloud, things like that?
Right. Yes, there's a large spectrum of clients from completely open-minded to more classical thinking. And a lot of the larger funds already have established compute. They might have farms of servers in the office or in the basement of the building. And it's a multi-million-dollar hardware investment that they've made, and they would like to monetize and make use of it. And so QuantConnect plans to release an on-premise version of our technology in the next few months, probably sort of mid-November. And this would let you run the exact same technology that we operate in the cloud, but all internally within the corporate firewall. And you would get access to the same backtesting, the same Jupyter research. It would all have all of the same technology linking all the securities together. And the only thing you would need to provide as a company is the compute and the data. And QuantConnect will monetize it with a seat price. And then if you'd like, we're happy to distribute our data to your environment. In addition to that, there's likely going to be some services element when we need to help them set up that environment locally. We're very happy to do it. If they have a library of millions of dollars of data, they probably want to use their own data rather than QuantConnect's. So we can help them port it over and use the QuantConnect environment with their own data. It's quite promising and quite exciting because this is, they say, don't invent a new product, just build a better mousetrap. It's kind of like a business cliche. You don't want to just, there are certain molds that people expect and understand. And so this data and data sales is a mold people intimately understand. And so it's nothing new. We're not like breaking a boundary there. We're distributing data in a different way. And we're allowing you to analyze that data in a different way. So that's quite a tried and true business model that we're happy to be launching through the platform.
Yeah, but it still seems extremely flexible, right? It seems like QuantConnect can integrate at any level that you find it necessary. Do you want, everything in the cloud? Do you want it on premise? Do you want only the data? Do you want the back testing? It sounds extremely flexible, and we hope that you guys are able to do some on-site installs and hopefully grow from there. Have clients raised any other risks? As we all know, funds are managing lots of money, and there's tons of financial risk and systems risk. How have they been questioning that? Integrating a new system always always represents a new chance of issues. Have you heard any complaints or any feedback on that?
No. So no, it's interesting. You're right. It is extremely flexible. And so even with the on-premise version, we're thinking it would be literally you can deploy the compute to your on-premise compute, or you can deploy it to our cloud. And so that allows us to, as a business, we can start capturing cloud infrastructure revenue. So those clients can scale into our cloud, or they can be using their on-premise compute, and our margins would be near 100% because it's software. And then from the investment risk point of view, a lot of funds, I believe, understand the value of open source to reduce the risk in their software. When you've got a team of a few engineers in-house, there's only so many eyeballs and so many hours that you have to really look at the source code and understand the bugs and see where the potential problems are. But with open source and tens of thousands of users online through QuantConnect's website, we're able to find issues through the community and with the community's help. And even a number of the community members go as far as finding the lines in the source code and trying to help us fix the code of Lean to make it even better. And so it's actually a massive risk reduction for a number of those firms.
Yeah, that totally makes sense to me. I mean, obviously, Dropshot's a small firm, and yeah, we only have so much time and eyeballs that you can put onto every piece of software all the time.
Right.
Just the amount of monitoring and everything else just gets out of control. So Jared, would you be willing to talk a little bit about QuantConnect's current valuation for the people who are looking to invest on the WeFunder?
Yes. So in 2018, we raised 6 million venture capital, and that was done at approximately this valuation. But over the last 3-4 years since we did that raise, the company's KPIs have grown from 6 to 12 times what they were in 2018. So we're not really looking, because of the current market conditions, we're not looking for an increase in valuation, but we're just going to continue the last valuation. But the revenues, the product, everything is so much better than it was before. And then additionally, in that time, we've had the benefit of some comparables. So now we have other companies in the space that we're able to roughly estimate from. And so those companies that we're looking at are sort of Bloomberg with Bloomberg Quant. And so who knows how to value that one. Amazon recently launched Amazon FinSpace as a financial research platform. Again, hundreds of millions invested. And both of those products are currently inferior to QuantConnect. And then there's another one, Beacon, that was launched, that raised in December for about 600 million in valuation. So we have comparables in the space. We have our last round valuation, and then also we have massive assets in the company. And these are in the form of the network and the ecosystem of users and funds and businesses that use the product, but also a mix of the open source IP and a lot of cloud IP that we have to manage thousands and thousands of users, live algorithms, and doing heavy simulations every single day. So we think it's an absolute steal. And we're excited to be offering it to the community and to be getting community investors to the platform. We want to make QuantConnect community driven and as much as possible community owned. A lot of who we serve are individuals and funds. And so we want to make those funds help us set the roadmap and determine what we're going to do for the future.
Yeah, I mean, that certainly sounds very exciting, especially in light of the new comparables. It's hard to, it's hard to argue when everybody else is dumping in money and, valuations are starting to go way up. I think, it being community owned and, going through the WeFunder is a different choice. It's certainly a community inspired way of doing things. We hope other people, jump in and see the value. A topic that all of us would like to hear about is how are you guys managing your growth and your burn? I saw in the current investor prospectus that there is a bit of negative burn right now. How are you managing that, and how are you seeing that going forward?
Yes, we've always been very controlled and systematic about the growth and the burn rate of the company. We were founded in Chile with grant funding, and we took more or less a bootstrapped approach to growing the company. In Chile, there weren't a lot of venture capitalists around, so we didn't have much choice. And so it's really instilled a culture of discipline and a culture of controlled experiments. So we have a thesis that's often driven by users asking for a feature or a product or something. We're able to plan it, execute it, test the results, and see if it's contributed meaningfully to the revenue. And so with that, we're able to carefully scale up our burn and only make sure it grows with the associated revenues. And so we think that we've demonstrated a track record of being able to do that over the last 3-4 years. We reduced our burn from about 250,000 in 2019 to about 40,000 now through growing the revenues of the company and also making the core technology more efficient. And so it's something that I keep my eyes very closely on, and I want to make sure that we're here for the long haul, and that we believe that in order to really be a successful quant technology company, we need longevity. We need to be able to serve these funds for the years to come as they scale up their business. And so we believe we're making the right decisions for that.